Hey, what's up, everybody? Tim Albrecht here, and welcome to this week's episode of the Ask a YFP CFP segment of the Your Financial Pharmacist Podcast, where we feature questions from you, the YFP community, to be answered by one of our very own fee-only certified financial planners. Please note this podcast is intended for educational purposes and should not be considered financial or investment advice, as we do not know all the variables to one's personal situation when answering a question. Before we jump into today's question, a shout out to our extraordinary YFP financial planning team that makes this segment possible. Your Financial Pharmacist offers fee-only comprehensive financial planning services that are customized to the pharmacy professional. So whether you want to pay off your student loans, make the right investment decisions, or simply build a solid financial plan, we'll help get your income working for you rather than the other way around. You can learn more by visiting yfpplanning.com. Again, that's yfpplanning.com. Okay, this week's question comes from Abby in Madison, Wisconsin.
Hey, this is Abby from Madison, Wisconsin, and I was wondering, does it make more sense financially to save all of our extra money for a down payment or continue to throw it at my private student loan? I have $134,000 left on my student loan at 3.09%, which is down from $370,000 over the last 3.5 years. And my fiance and I are looking to buy a starter home in August 2021 after our wedding in May. It's just not realistic for us to continue to rent as we're looking to start a family in the next few years. I know 20% down payment is needed to avoid PMI, but not sure if it's worth it or not, taking into consideration my student loan. I'd like to know what your thoughts are around this topic. Thanks.
Thank you, Abby, for submitting your question to be featured on this week's Ask a YFP CFP segment of the Your Financial Pharmacist Podcast. Tim Baker, what are your thoughts?
Yeah. So first, congratulations, Abby. I think I heard the question right, is that you were at 370,000 and in just 3.5 years, I've got it down to 134,000.
That's awesome.
That's fantastic. Yes. So this is very similar to some of the other questions that we get, Tim, about, hey, should I invest or should I pay down my debt? It's a great question. It kind of goes back to my de facto answer. It depends. But I think for the most part here, do I put more of a down payment on the house, or do I keep tackling my private loans? You're looking to buy a starter home in August 2021 after your wedding. It's coming up in May, and start a family, and you want to do what you can to avoid PMI, which the general rule of thumb is to have 20% down. But we know, given some of our relationships, one with Iberia Bank and Tony Umholtz, is that you can put a lot less down and still avoid the private mortgage insurance. So it is a multifaceted decision, the home purchase, when to buy, where to buy, the real estate agent, financing, what the rates are, what are the must-haves, the nice-to-haves, how much should I be saving, how much to put down of what I have saved, what do I need after the fact. I always tell the story of when I bought my first home, Tim. We bought a new home and it didn't have any like window treatments or blinds. So, we had to spend like $8,000 just on that alone. And that number goes up every time I tell it. And then, how does it affect the taxes? But then it's also like how you feel about the debt. That's right. So whether that's the student debt or the home debt. So it's a lot. And I think, Abby, if you look at your loans, and I believe you said that your rate is at 3.09%, which is fantastic. And it could be as easily as understanding what your mortgage is going to be. And again, if you're, I was just talking with a prospective client that was in the process of actually building a house. So they were waiting for it to be built and need to lock in their rate. And I think the home was not going to be ready until September. So kind of the same timeline. We're not really going to know what the rate is going to be, but it could be, if your interest rate with the loans are 3.1%, we'll say, and your mortgage is going to be 3.5%, maybe it makes sense to put more towards the mortgage. And then if the flip side is that if your private loans are 3.1% and your mortgage is going to be 2.75%, maybe it makes sense to put more money towards the private loan. So I think it goes back to the emotional side of it. The nice thing about the student debt, if I can say one nice thing, is that it's afforded you the opportunity as a pharmacist to make, more income than what a typical family, a typical household in the United States. But it's not collateralized. Like your brain is not collateral. The nice thing about a mortgage is that it is collateralized by the house. So there might be some people that are like, okay, I just want to get free of the student debt because there's no asset that's balanced that out.
Right.
I think it really goes back, Tim, to how you feel about it. So there's really no right or wrong answer. Now, if the loans were at 5%, or 9% and you were stuck there, it would be a different thing. what your loans are going to be and what your mortgage rate is going to be is probably going to be right in the ballpark. So I might err on the side of, regardless of where the rate comes in for the mortgage, that you have all of this great momentum with the student debt, that if you paid off whatever it was, $240,000 in 3.5 years, maybe you need another year or so to get through the student debt and just be gone and cross that off your balance sheet. And then, focus on the next best thing, which could be paying down the house quickly, or it could be that, you really want to start building out your investment portfolio.
And I agree, Tim, Abby, congratulations. I mean, I hope that while we're getting in the weeds on the decision, and obviously you are analyzing as well, I hope you'll take a moment to pause and reflect on the journey and really how incredible it is. And, I would like to echo what Tim Baker said. We've got good partners in Nate Hedrick, the Real Estate RPH, for those that are looking for a real estate agent, as well as Iberia Bank and Tony Umholtz and their team who are looking for a professional mortgage loan option. If you go to yourfinancialpharmacist.com, and if you're interested in looking to buy a home, you can click on that part of the website and you'll get to that information. Tim, one thing folks may not think of as it relates to this question, especially if they have a frame of reference of traditional financial planning that may not be as well versed in things like student loans and home buying, is the value in this type of fork in the road, if you will, decision making. Should I do A or B, and what are the implications? And here we're just talking two options, and typically there are more considerations in play. So talk to us about how in the advisor-client relationship, when it comes to one-on-one financial planning, how you approach these types of decisions and why it's so important that folks aren't thinking about these in a silo.
We work with pharmacists. We work with professionals of all ages. We work with a lot of 30-somethings, 20-somethings, 40-somethings, and maybe the home purchase is something that's on the docket for them. Most financial planners, if we look at financial planners that are out there, they're not going to really help you with some of these more non-traditional decisions like a home purchase or real estate investing or things like salary negotiation. But what I've kind of recognized over the course of working with many pharmacists is that these are areas where we typically misstep. And I think you've said it, I've said it myself, that I've made mistakes, when I bought my first house. And it's the biggest purchase you're going to make at one time. Student loans might be a bigger purchase over, many semesters, but it's the biggest purchase you're going to make at one time. And to have a partner that's going to look objectively at your financial plan, which when we are advising you, we've covered those it depends type scenarios where we're going to understand a snapshot of where you're at and a snapshot of where you want to go, i.e. goals. And then we're going to be able to really advise you in a sense that we're dispensing recommendations that we feel are in your best interest when we look at, the goals that you have and kind of what's at your disposal. So again, typically things like home purchase and real estate investing and things like that are out of scope, because a lot of financial planners, if they're working with people in their 50s, 60s, and 70s, they've done that already. And, they don't really need help with it. It's kind of experience by fire. But to me, I think our role is, this is an area that's a big dollar sign attached to it, that we want to make sure that we're not making mistakes. And it really came out of I would talk to clients, and just like I did, they would buy too much house or in an area that they weren't, or they didn't understand financing. And I'm like, we have to do a better job of getting in front of this. And same thing with salary negotiation. I would talk to pharmacists and they would say, "Hey, Tim, I accepted the job." And I would say, "Great, did you counter offer?" And they're like, "Oh, no, I was just happy that I got a job and I just accepted it." And I'm like, okay, we need to do a better job of, making sure that we're intentional towards, the financial plan that we have in front of us. So we're definitely going to be a lot different, I think, than the traditional advisor. Like I said, we work with clients of all walks of life and ages and things like that. But I think for those that are looking at a home purchase and how that fits in with the rest of the financial plan, it's super important to have that objective third party that, is going to be able to provide resources. Like I said, Nate, financing, with Iberia, if that's an option, and just the process itself.
Yeah, and as we say, Tim, often to prospective clients, when it comes to comprehensive financial planning at YFP Planning, anything that has a dollar sign on it, we want our advisors in that discussion with the client and in the decision making as we look at the rest of the plan. And so this is one example here. And for those that are interested in learning more about the comprehensive financial planning that we offer at YFP Planning, head on over to yfpplanning.com. You can schedule a free discovery call to see if it's a good fit for what you are looking for. And Abby, again, congratulations on the progress that you've made. We appreciate you taking time to submit the question. We'd love to hear an update from you in the future and where you decide to go to this. And for others, we'd like to answer your question. So please consider that. You can submit a question by going to yourfinancialpharmacist.com/ask YFP or submit us an email at info@yourfinancialpharmacist.com. Have a great rest of your week.